very excited to share how cold it is. And we're not even close to done yet. We're going to likely have a very sizable snowstorm that's going to hit us at the end of this week, probably 1.5 feet here in Maryland. And the other fun thing about this is there was a period of time, real quick story, because people are still coming in here. I moved back to Chicago. I've lived in Chicago 4 times. College, post-college 1 year, 2 years during the financial crisis, and then got married and moved out there for 3.5 years. Now, in early 2009, we had a cold snap there. And I worked right in the shadows of the Chicago Mercantile Exchange. So that was 3 blocks. For 1 week, it was at least minus 20 wind chill. And when I ran out of food, and I did on day 4, because I was living the life of a journalist with nothing but condiments in the fridge, 1 couch, and a mattress on the ground. Very self-fulfilling, very exciting time. But I had to go outside because I had to get food. And I put on every piece of clothes that I had. I put on multiple socks. And I walked out into Printer's Row, and I left a millimeter of skin exposed between my ankles and my knee, between my boots. And the wind just hit that. And I felt the ice just go right up into my right knee. And I went down hard. And then I learned what I believe DoorDash is, whatever the modern equivalent of it is today. So I don't want to hear about it's -3 in Chicago. Guys, come on. Just leave. You don't have to be there. All right. January 20th rant over. Hope you're doing well. Looking at futures real quick. Gold, 47.28. Don't you tell me that I said that I had been bearish on silver. Somebody came out the other day and said, yeah, but I thought you were bearish on silver. When? They're printing more money, guys. They're not going to stop. You really think the solution to what's going on in Japan right now is going to be, hey, let's stop printing money? No. They're going to monetize some more. It's coming. Looking at silver, 95. Told you. Nat gas, I missed this on Friday. I feel bad about it because I had that feeling it was oversold. And big pop today. Well, yes, obviously. But I will warn everybody, and I just want everyone to think a little bit about natural gas before we get started. The whole morning is about the headline around Greenland and about Trump hitting 8 nations, and then they're going to reply back. What do you think the Trump card is? Yes, pun intended. It's right there. Just saying. If we turn the taps off, natural gas prices will collapse because we're not going to be shipping to foreign markets. That would be a huge bluff, but that kind of is one of the things you got to think a little bit about. So be a little bit cautious trying to chase this. Bet small if you're going to bet on natural gas prices. We're going to watch the XLE. We'll talk about some other things. Good morning. Looks like everybody's finally here. Okay. Just making sure. Don's already talking about tacos. I wouldn't chill the wind with you. Okay. Whew. All right. Let's get into it. Why are you here? Well, this is the perfect day because anybody who was bullish last week is already bearish. It's very clear if you haven't watched the news this morning. But we want to talk about positioning. We want to talk about the idea of zero date. You know, Don's been talking about zero date forever, but really the key focus right now, like this is the time to be focusing on zero date because volatility is returning. And once again, we're heading into the next 2 weeks are very, very critical. There is a lot of earnings reports coming out. Obviously, you got Netflix today. You have a lot going on with jobs numbers. You have expectations around the Michigan Sentiment Index. Have you noticed that I haven't said anything yet? I haven't bragged yet. It's coming. Don't worry. I almost said it. Have you noticed that? Okay. Anyway, we have Meta next week. We have the Fed next week. There is a lot of news setting up right now, and as we turn to today, we want to make sure that we're focusing on what the right headlines are, and we're going to do that in a moment. Real quick. So I'm just going to flip this upside down because that's where we're going to be in about an hour. Selling pressure on the S&P 500 had picked up a little bit on Friday, and this intraday reading actually went negative at the end of the day on Friday. That's not really terribly predictive, but that said, we woke up with some very strong stress in our pre-market evaluation of this, and I'm not going to be shocked if the SPY is going to continue its descent at the moment. Right now, S&P 500 has now pushed down to its 50-day EMA, and that's going to be a critical line in the sand for this trading session. Now, we want to be paying very close attention to these key indicators, but I want to point something out, and it can get a little funky here. That EMA, that 50-day EMA, that crossover on that 5 and 20, I want you to pay attention to these metrics over the next couple of days, actually hours. Key thing here is if this starts to roll over, I don't know where this can go. And we've been talking about this. We've been warning about this. We constantly are talking about negative momentum, and I want to explain what that means in our final 10 minutes and give you some rules for momentum. That said, this 50-day is starting to slow down. And now the big question is, do we start to see a downturn in these moving averages? And that's where I got to get a little cautious. So, again, Federal Reserve doing everything they can to pump money into the system. Japan stimulus, and yet we had that crack today, that huge move in the 30-year bond in Japan, which we'll discuss in a moment. Here's your headline. I worry about this the way that I worry about the sun coming up, but the market is reacting to escalating tariff threats tied to Greenland rhetoric. Okay. President Trump's going to speak at Davos tomorrow. He is going to, I think we should all get together and just not even bother talking for the first 15 minutes. Tomorrow it's at 8:30 Eastern. This is must-see television. Like this is going to be. We might actually have to do that. I might have to come in here and we might just have to throw it on and Mystery Science Theater 3000 this for a little while, because this is like going into the opposing stadium and just dropping your shorts on the 50-yard line. This is going to be fascinating to watch. And again, Europe is trying to respond to this. This is all about whether or not the United States should have not really even sovereignty, just control over Greenland resources, the emphasis on satellite communications. I don't know if anybody noticed this, but Greenland is run by Denmark. Europe, in order to protect it and address ongoing concerns, sent 34 troops last week to guard Greenland, which is 1.25 times the size of Alaska. So they sent enough people for a respectable beer pong tournament. Trade uncertainty is really built around this. Putin absolutely loves this, according to Reuters. FX, commodities, risk assets, uncertainty. But again, this is the big headline. This is the big headline. But the reality is this. That's what matters. Because Japan, their long-end bonds are going ballistic now. And we added 40 basis points, or 39, in 2 days on the 30-year bond. JGB 40 years are over 4%. That is the highest since they were established in 2007. I don't think we need to talk about this anymore. Japan anchors the global carry trade. It has been the cheap source of funding for years. It has been the source of the plumbing for the financial sector. And all of this leverage and all of the carry and all of the ongoing ability to just borrow cheap over there, bring money here. And now the question remains the same. It really is about cross-border capital flows. What does that mean? It means money that originates in a foreign place and comes to a different nation. We have a massive pile of capital that is from abroad, other nations chasing returns here. That helps boost leverage in our system. That boosts valuations in our system. And major crises tend to originate when that money goes home. So, again, rising yields are tightening dollar funding globally. What does that mean? Remember, the dollar is the instrument of trade internationally. And when there is uncertainty and when interest rates rise and when collateral quality changes, it's harder to get dollars. This is happening in Europe right now. It's happening in other nations right now. And the key thing, the term, we don't spend a lot of time talking about this. And we don't talk about it because it is intentionally confusing. But I'll tell you right now, the stuff that matters, the thing that really matters in the world today is what is known as Forex pressure. The real pressure in the system today is in here. Those look like simple charts, but FX stands for Forex exchange. You know those little things in the airport that allow you to swap dollars for euros? Yeah, okay. Well, that's basically it. And sometimes the dollar is, 105 on the euro, and sometimes it's 110 on the euro, and the value shifts constantly. But if you're a bank in Japan and your balance sheet is measured in the yen, the customer deposits are in the yen, but the assets that you want to own, like treasuries and Apple bonds and international loans, they're priced in dollars. And those assets have to be funded, but it can't be, you don't go into a bank to get $1 trillion swap on, or $1 trillion yen swap for US dollars. The money has to go somewhere. And where does that money go? It goes to the FX swap market. The swap market isn't that confusing. It's basically just a trade back and forth between currencies. I borrow currency from you using my local currency. We promise to exchange it back later, and I give you a fixed rate for it. The problem is something that is known as cross-currency basis. Don't memorize this. Have a drink in like 4 hours and forget that I even brought it up. But I want to just explain this because it's very important. If I have $100 and you need, I have 100 euros and I need dollars for a trip, I might trade it to you, and you might say to me, okay, I'll give you, US dollars, but everybody wants dollars right now. I need you to pay me more for the right to my dollars. That extra premium is known as the cross-currency basis. And why does that matter? It matters because when that basis starts to rise, it is indicating stress in demand for the US dollar. And that is a leading indicator of stress that shows up very quickly. It showed up with major unwinds that we've seen in leverage like August 2024. We saw it in the Euro weekend back during the dollar funding stress in 2011. It is an issue. The BIS talks about this. The Fed talks about this. We don't hear about it on CNBC because, to be very honest with you, it's not that easy to, it's not something that's even borderline interesting to learn. You kind of have to fall into it drunk on a bet. But once you understand it and you see how it actually operates, it makes a lot more sense. And you recognize that crises originate, a lot of crises originate within FX funding. And that's why we talked about repo, and that's why the Fed was very transparent about repo. And that is really the key thing that we have to be paying attention to over the next 48 to 72 hours. Other small things, just so you know. Hey, honestly, nothing else matters today. It's Greenland and Japan, two islands to decide what's the most fascinating country in the world, Japan or Greenland. That's it. One's a tiny little fella in the Pacific, and one is like a bunch of sad, depressed fishermen looking for a leader. Netflix, great. What's going to happen? Who cares? Netflix is going to report. Cool. We'll talk about that because we'll talk about it later today because, Netflix on the backside of this, but like Netflix is not under pressure this morning because everybody's excited about their earnings, right? Or that see a little bit of a pop, right? Amended merger agreement to acquire Warner Brothers. It came through. Oh, well, that's exciting. Now watch the stock go to about 45. All right. Market intervals. This is the other thing that's important because once Japan starts to do what it does, once the volatility increases, breadth is deteriorating. More breakdowns than breakouts. We just saw that in our momentum reading. Bonds are selling off alongside equities. That's important because remember, correlations. Everything goes to one. Everything falls at the same time. This is leverage coming off. The FNGD has been telling us this, and people have been asking, Garrett, why is the FNGD above its 20 and its 50? And I say, I don't know. But turns out that our old friend Japan is back. And it's been there the whole time. And we knew that. We've talked about it. But I think a lot of people got tired of me talking about Japan. They wanted me to talk about fast-moving momentum stocks with significant upside, triple your money. The reality is this. This is where it gets a little gnarly, and this is where policy coordination is likely going to occur, and we'll see what happens. We'll see what they throw at the wall. But the FNGD, Mr. Charlie, just showing us once again that stress has remained in the market, and this also answers a lot of the questions around, okay. It's been there. And all the insurance is selling off too, right? W.R. Berkley, despite the fact that it's had monstrous amounts of insider buying, getting beaten up. Kinsale, getting beaten up. Good company. Bad economic conditions right now. So keep an eye on the FNGD. Keep an eye on policy. We'll be watching the insiders as well. Finally, central bank credibility in focus with the Lisa Cook Supreme Court story. I don't care about this, but hey, it's worth our time because the central bank's going to be in focus for the better part of a week and a half. And it's just one more reason for us to talk about Jerome Powell and his tie. We'll be talking about the Fed next week during that awesome meeting where nothing happens here live. All right, what are we on? Hello. Look, this is an environment where you've got to be extremely cautious. I'm just going to tell you right now. This is where you got to move into technicals. We'll talk about some of that stuff with negative momentum in a minute, but Carvana, you are bad. You're bad, Carvana. Yeah, look. I will short this, and I will try to take it all the way down to at least the 200, or at least the 50-day EMA, 515. Buying up here, right? Buy up here. Buy deep in the money. Play defense. Don't try to speculate too much. If you want to go lottery ticket on Carvana, I got no problem with that, but it's going to be expensive. Consumer credit under some pressure. We're going to get that consumer sentiment number on Friday, but these are all those names that Blake had been talking about. Companies like Ally. Look, Ally cracking under that 50. And it's got a long way to go. This can get ugly really quickly because, remember, this is not really just about what is happening with auto loans. It's about the collateral. This stuff is collateralized. It is packaged. It is bought. And then interest rates go up. And then the people holding this crap go, wait a minute. Is this trading at par or not? Wait, it's at 90 cents on the dollar? Hope they don't mark the market today. Well, one day you wake up and you go, This is a steaming pile of consumer crap. Mm-hmm. And as you can see, when we have these deep pullbacks, August last year, Nikkei crash right here. That, by the way, nobody talks about. That was China. Huge drop here. This right here, we know what that was. This was the liquidity drain in February. Negative momentum event, negative momentum event, negative momentum event. We're right there. What's the downside on Ally? 36. And then the funny thing about this is that when they do step in and they do provide support and they do print money, Japan, November 21st, what happens? This crap goes up. If you're people ask me, well, how do you trade momentum and liquidity? You trade the crap in the credit services. You can literally just do that. Man, I'm fired up today. This is good coffee. Hey, let's run this thing into the ground. Straight into the ground. 2 weeks out. $40 put. Just pure lottery pick at this point. Because if you're going at it and they can't shore this up, Ally, and if we have a negative momentum event, these are the things that go, and they go quick because, once again, collateral, beaten to the ground. KBH, I always liked this company. Oh, well. It's been a good time, everybody. Let's go home. We are home. That was fast. All right. Yeah, why not? Interest rates moving up. Is all this stuff really panning out? We bought a bunch of mortgage-backed securities. They front-ran those. And then what happened? Starting to roll back over. That's the lesson of all of this stuff. The central bank, the Fed comes in and they say, hey, we're gonna start buying bonds, treasury bills. And everybody goes, well, when are they going to start? Well, they're going to start in like a month. Oh, well, we should buy some treasury bills too. And everybody front ran it. Now it's all peeled back. So, yep, all this stuff, all that fun goodness that has happened with what are we doing with mortgage-backed securities, and they bought it, and everybody front ran it, and okay, well, now that's not working. So, this can go pretty fast, and the fact that they're buying $40 billion a month of this stuff and it's still not given, this is something. Shows you where we are, and it shows you that at some point there's not going to be enough firepower. It might not be now, but it's coming in the next 10 years. And it's where the short end of the curve moves, and that's where the real problem is. We've got to get this under control. Fortuna Mining announcing a 31% increase in gold mineral reserves over an extension of mine life over 9 years and wherever that is. That's a lot of accents over letters. Ivory Coast. Is Dieder Drogba involved in this? Probably not. Anybody get that reference? We're friends. All right. CTRA and KR. Let's look at the longs. I have a hard time being long anything today. But you know what? Watch it all work out. KR. Kroger. How? Well, Consumer Defensive's coming in and getting a bid. Yeah, we need to get above this key level right here, that 50-day, that's 63.44. Once we get above that level, if we can, then I'm buying at this level and I'm selling up at around the 65.66. We're not there, so I'm not forcing anything. KTRA, everybody's going to be in natural gas prices today. They're going to be watching this thing all day long. I'm going to tell you real quick. CTRA, nice move, big pop, good run. Everything looks solid here. Sell down here. Sell spreads. Don't chase it. You don't have to. Instead, what you do is you look out onto the options chain, And then we're going to have some fun with the UVXY in a minute. You sell spreads. You look for implied volatility to pick up, and you sell to the downside. See if you can get down there at that 25 level. See if you can get that 25 for, February 20th. And maybe do something like buy the 24. And what that's going to give you is a 77% probability of profit with a 25% return. 25-24 put spread on CTRA. Look for a continuation. Just look for it to hold above these key levels. And if it can, awesome. And if it can't, just buy it back. Move on with your life. Boyle, this is going to be your key technical to watch today. As you could tell, natural gas prices are moving higher. 34% move today for BOIL. This is the double bull ETF. ETF, yeah, for natural gas. Push it back above this level. And everybody's going to be speculating on the winter storm, and hey, that's exciting. But I want you to be watching for overbought, and we're going to likely get there. We did this in December. Remember, I completely missed this. I know that Eric in Northport did well. Don said it didn't count. That's fine. But when we get overbought on RSI, on UNG, if we get there, you're looking to go the other way. What goes up comes down in natural gas environments, hedging builds. If you want to chase this, chase it. I'm not going to stop you. I'm a nice fella, but I'm telling you, you got to be cautious right now, and you got to be very cautious heading into that speech by Trump. There is a tail risk in him saying, hey, no more natural gas for you. UVXY, we're just watching that like we're watching the FNGD. UVXY, look at that. Yeesh, yikes. We're above the 20. That's enough concern for me. Don't sell vol. Don't sell vol. All right. Bad things happen. All right. So, hello, chat. What do we got? You guys talk about some very fascinating things. Katera rumored to be mergers with Devon. Yes, that is true. Ally Bank, also Ally Brokerage. Could it also be Ally Bank, Ally Brokerage, Ally McBeal? Coincidence? You tell me. I'm just asking questions. Negative momentum. All right. If we get it, we typically look for 3 straight days of declining buying pressure, not selling pressure. Selling pressure pick up, but when we look for the reversal, that's where we don't have stocks breaking out anymore. And hey, we're here. It's gone since Thursday, and if we get there, we have the FNGD moving higher. If we shift, again, this historically can and will go the other direction. So August 2022, August 2024, February 2023, it's great. I don't know why my numbers are it's just because everything's rhyming at this point. Momentum measures capital inflows and outflows, liquidity events. This is not about opinions. This is not somebody on CNBC saying, I think that the S&P 500 is going to 5,000 or 8,000. This is a measurement of the number of stocks breaking out versus the number of stocks breaking out down on a bell curve. And we assess stocks in breakout conditions versus breakdown conditions. And when this goes negative, it is telling us the good times are taking a temporary break. Last time that we had a significant downturn was February 21st of 2025. Does anybody know what happened in the next 2 weeks that justified that? There isn't an answer because nothing was the answer. The real answer came in April when the trade war really picked up. We had some excess liquidity drain, but this signal also went negative on February 21st, 2020. Does anybody know what happened 5 weeks later? COVID. Capital left 3.5 weeks before COVID even led to a shutdown here in the United States. Money was already gone. And that is a reminder that you follow flows and you follow price before you pay attention to headlines. Because by the time that the price is already moved, the story is here. That is what matters. So right now in this environment, I want you to remember this. What is going to get us out from under whatever is going on right now? Trade is going to be important, no doubt about that. But also Japan and liquidity and capital. And is the Federal Reserve going to do more? Are we talking QE? It's funny. My prediction for 2025 was that we were going to do QE. That was my wild card. And they didn't do pure QE, but they sure to damn well did a program that's very similar. And that's what we're looking at right now with reserve management. Full-blown QE. If they weren't doing the reserve management right now, I'm telling you that the S&P 500 would probably be 15% lower than where we are right now because of the stress that is clear in this system. That's just my opinion, but given the fact that the downturns that we saw with Japan back in August 2024 and the multiple times that volatility has picked up, 6 times volatility has retreated by 40% within 10 days in the last 15 months. That has never even come close to happening before. So everyone is looking around right now and saying, what is the Fed going to do? How is the Fed going to resolve this? What are the central banks doing right now? Everyone is banking on a Fed put right now. And I don't know if it's coming. Because they're already doing as much as they can. So let's keep a close eye on that. QE is extremely good for precious metals, but anytime they print money, even if it's not QE, and they just call it something else, they're printing money. Cash is your friend right now if this signal goes negative, and we will be watching insiders over the next couple of days. Do not be selling premium to the downside right now. Negative momentum leads to indiscriminate selling, and you could be assigned something that you don't want. So we have some positions that we have open around individuals' equities that are tied to insider buying. Probably going to yank them. Going to sit on more cash. Again, this can expose you to deeper downside than people expect. Remember, NVIDIA in 2024 in August fell 33%. Nothing changed on the fundamentals. Nothing changed on the narrative. So if you have existing put spreads that you have sold, lift them. Take the gains. Learn about implied volatility rank. We'll talk about this stuff today at 3 o'clock. But you want to be looking at what options are cheap, what options are expensive, because that's going to tell you whether or not you should be going long with puts or long with calls and buying or selling premium potentially to the upside in the event that you want to sell credit spreads to the upside if the market is pulling back. Again, that's credit call spreads. Long puts can be expensive in high volatility environments. If it picks up, call spreads profit from sideways or declining prices and define risks. So selling vertical call spreads on high implied volatility stocks can be beneficial. Watch for oversold conditions. This usually ends in periods where the RSI and the MFI both move into oversold. Algorithms will buy when the humans will freeze, and if there is no buying pressure at any point, well, then look for a short squeeze. And finally, only sell puts at peak fear. I will tell you when peak fear is here because we will be talking about the Great Depression and everybody will be a great expert on that. Or we get to the point where volatility is extreme and we start to see a combination of oversold and massive levels of insider buying. So negative momentum is not a prediction. It is a signal. Remember, things to remember: protect your capital first, use volatility strategically, and let fear create opportunity. Okay? I hope you guys have a great trading day. Don's coming up momentarily. He's going to throw some music on. Good opportunity to really learn about volatility today, everybody. If you're not a member, click the link, name your price, and get in the room with us. We will be going live all day until 4 o'clock. See you guys. Hope you have a great day. Talk to you soon.